David, Harvey, good to see you both. Carlyle obviously is a giant global asset manager, raising money from, investing money all around the world. I want to start with the macro environment, particularly the geopolitical outlook. Carlyle's roots have always been in Washington. You, I believe, David, spent some time in the federal government. Let's start with Washington. What is your read right now? Yeah.
Well, Washington is always interesting. And right now, I'd say that many people in Washington are focused on the potential change in government if there's a midterm election that doesn't go in favor of the Republicans. We don't know what's going to happen. Generally, presidents in their first midterm election after they're elected lose, on average, about 25 seats in the House. If that were to happen, then the Republicans would lose control of the House. In the first midterm under President Trump's first term, he lost 41 House seats. So people are focused a bit on what's going to happen in the midterms and how that will shape the government. Right now, the president has pretty much all the legislative authority he wants and the legislation, so he's not looking to pass a lot more. So it's not going to make that much difference if the Democrats do win control of the House. I think the president's focused on implementing the agenda he already has. And right now, I think the economy in the United States is in reasonable shape to grow at 2% or so. Inflation will probably be around 3% or so. The president will announce his new selection for the Fed chairmanship relatively soon. I think it's generally thought that the current head of the National Economic Council will take that position. Could be wrong, but that's what it seems like the case. Kevin Hassett, who's very qualified if he were to get the job. And the people in Washington are also always focused on the next presidential election, but it's a little bit down the road, so probably too early to speculate about that.
And when you look geopolitically to the Gulf, to Asia, to Europe, what's the sort of macro environment like?
Right now, I'd say that the president is, I can't speak for him, but my sense is that he's trying to get the war in Russia-Ukraine over. And I think all wars eventually end. And I think that we're in the latter stages of resolving that one way or the other. And I suspect 1 year from today, that war will be over one way or the other. And I'm not sure that either side will be happy with the results, but I suspect 1 year from today, I suspect that war will be over. Tension may turn to what's going on in the Middle East, and hopefully the resolution in Gaza can hold, and other things in the Middle East can have the stability that people want. The Middle East is not just the Middle East, but it's really become the middle of the world because the attention of the world is increasingly focused on what's going on in the Middle East, in part because of the economic power of the Middle East, and in part because of the willingness of many people in the Middle East, and particularly people in Abu Dhabi, to focus on how to create greater wealth for people in their country and in the region. And I think Abu Dhabi's done a spectacular job of creating a capitalist system that I think works for virtually everybody. And it's a real model for the rest of the world and for the Middle East. So I applaud the people in Abu Dhabi for having kind of developed a form of capitalism that seems to do quite well. And I suspect the President of the United States is not going to have to spend that much time dealing on issues in the Middle East because I think they're going to largely work out themselves. With respect to China, Taiwan, too early to say what would happen, but I suspect that nothing dramatic will happen in the near future there.
So that's the backdrop. Harvey, your job as CEO is to figure out how to make money in that. So when you look across the landscape, what's maybe perhaps the most exciting opportunity and a place where maybe you're a bit more skittish?
Well, let me first say congratulations to your highnesses and your excellencies. What an extraordinary event. It's a real honor for David, myself, and all of our colleagues at Carlyle to be part of this week. It really is a remarkable venue, and congratulations on your success. So in terms of the investing environment, I would make sort of a high-level comment about where we are in the markets globally. Obviously, there's been an incredible run in equity markets. Credit spreads are at all-time tights. I would say when we look through, Liz, our portfolio companies, so David created the firm back in 1987. Today in our portfolio companies around the world, we employ about 700,000 people, which makes us one of the largest employers in the world. And we roll up all that data. And the employment picture, the EBITDA growth picture, I would say operating performance picture looks quite strong across the entire platform. So that gives us confidence, Liz, in the economic environment. Now, when we think about deploying capital, Liz, on behalf of our investors and people we partner with around the world, we think about it in many years. So we're in the private capital business. We manage about $475 billion of private capital, which makes us one of the largest in the world across private equity, real estate, credit, insurance. secondaries and co-investment solutions. And so when we look at that, we look for very, very meaningful trends. And I would say, based on what David just described, we are at some inflection point in history in terms of how capital is being deployed. If you think about the last 30 years of trends, they really have shifted. And the primary trends today, I think, are obvious to many people in the room, but they're things like national security, which leads to aerospace and defense. There's really global competition for economic growth now and creating affordability around the world. And this is really a Western Hemisphere challenge, but the demand for private capital in reindustrialization, aerospace defense, energy demand to support all the energy needs around the world. And then, of course, other trends, Liz, which maybe we'll talk about, is just, we're inherently optimistic in what we do. I believe, as David just described, the world will continue to get better. Hopefully we'll have a conclusion to all these wars, but longer term, wealth will continue to accumulate around the world. And retirement is now a business that our industry is focused on, and how our business is now extending into different parts, I would say different clients around the world. That's also a global phenomenon. So those are the big trends that drive our activity and our thinking.
I'd say that I first came here many years ago with Secretary James Baker, who was in our firm then, and George Herbert Walker Bush, who, after he left the presidency, was in our firm as well. And I met with Sheikh Zayed, and I remember him as being an extremely humble person. And humility is a virtue of leaders that I admire. And he had a great deal of humility. And he also, I think, did something I think really great leaders do, which is listen. It's always great to tell people what to do, but listening to what other people say is actually a great virtue. And he did that. And the form of capitalism that ultimately evolved in Abu Dhabi is a form of capitalism that I think other countries in the world would envy, which is to say, spread the wealth around the country, give people a chance to participate in economic development, and also listen to what the people think makes sense, and also have a great deal of humility. Even if you've become a very powerful economic powerhouse, listen to what the people say and be humble about what you've achieved. And those are virtues that I think Sheikh Zayed exhibited whenever I met him and everything I read about him.
One big theme in private capital right now, as Harvey, you mentioned, is retail and a push into retail fundraising. I think you were here this weekend for the F1. I believe you are a sponsor. Congratulations are in order, I'm told. I missed the race.
Yeah, no, Max was really extraordinary this season. We wish we had gotten the championship, but it was a really amazing comeback.
But that's a big sponsorship and a push for you, I think, into the high net worth channel. Can you talk a little bit about and Carlyle is certainly not alone in chasing that retail money. These are products that have been institutional products for most of their 50-year history. What is the opportunity in retail? What perhaps should we be looking for? Retail investors are different fundamentally, and curious what you're seeing in that channel.
Yeah, so I think this is just, a lot's been talked about this is somewhat revolutionary. I think it's hardly that. I think it's quite evolutionary. In the early days when David formed the firm, they didn't even have anything called private equity. There was leveraged buyout. Of course, over the past 38 years, you've seen the evolution of public market capital. We've lost half of the public companies since 2000. Private capital has evolved to fill that need as an efficient form of capital around the globe. And you've seen the rise of things like ETFs. And as I said, this is just a natural evolution of the development. I mean, we think about the industry of private capital, it's quite young. David created the industry, as I said, almost 40 years ago. And so I think this is just a natural evolution. Now, as we go through this, the critical factor is how do we actually deploy this capital for that constituency? If it's in a retirement account, if it's in a wealthy person's account, or as you said, in a retail account. And I think that the level of care here is what the industry needs to focus on, because to sort of describe these as liquid instruments like ETFs or stocks, that's a complete misunderstanding. And I actually think, the industry in its early evolution refers to some of these instruments as semi-liquid. And I think the industry would behoove itself to call it sometimes not liquid at all. And so I just think we need to be very, very clear with all of our partners and the platforms we're on globally about actually the performance and the expectation, how people should think of this in portfolio construction. But it's quite natural. In terms of our partnership with Oracle Red Bull, that too is not revolutionary, it's evolutionary, but we're quite thrilled about it because it really represents everything that we see in the future. It's global, it's a diverse sport, it has 800 million viewers, it's growing, and Oracle Red Bull as a partner has been an incredible partner. And when you talk to them, they talk about the same things that David and I talk about at the firm: teamwork, precision, excellence, data, and so it's a very natural partner for us.
I would say, fortunately, to be an investor and supporter of an F1 team, you don't have to be a good driver. And so I didn't have to take a driving test, nor did Harvey, in order to be a sponsor, because I wouldn't have passed it.
Last time you changed a tire, how long did it take you to change a tire?
I changed a tire once, and it took me an hour and a half. They did it in 1.7 seconds. So
yeah, 1.8.
It's different.
That's what they call a spread on Wall Street.
In terms of alternative and the retail kind of thing you mentioned, we have a system in the United States where if you're very wealthy, you can invest in, or a big organization, you can invest in alternative investments, so-called. And over the last 50 years or so, alternative investments in almost every single year have outperformed public equity investments and public fixed income. And the wealth has accreted largely to large institutions and wealthy individuals. What we want to do in the United States now, and I think the administration under President Trump is beginning to do this, is say, what about the smaller investors that don't have access to the Carlyles of the world? How can they participate in this higher rate of return? And that system is beginning to put into place. And I think it'll actually be fair and equitable, because you shouldn't be a wealthy person only to be able to get the benefits of the higher rates of return that you get from alternative investments like buyouts or venture capital. And that system will be put in place the next year or two. And I think it will go around the rest of the world as a good evolution of private equity and private investment to make it available in the so-called democratization of private equity.
But part of the reason that those returns were so good for so long in privates is that they had large parts of the economy to themselves and less capital to deploy. And I wonder whether, if it gets opened up really broadly to retirement accounts, 401ks, trillions of dollars coming in, usually that means that returns will come down. So is it really about opening higher yielding investments, or is it more about a convergence of these two things?
Well, for the last 50 years, every time a new set of investors came along, public pension funds, sovereign wealth funds, global pension funds, private family offices, high net worth individuals, people said it's too much capital and the rates of return will come down, and almost every time they've been wrong. So the markets are going to expand. There are more opportunities. The population world is getting bigger. And remember, 2/3 of all private equity dollars are invested in the developed markets. The so-called global south gets a very small percentage of private equity alternative dollars. So there's still enormous opportunities. And while the rates of return could come down, they'll still be, I think, much higher by 200, 300, or 400 basis points than the average public equity returns will be. So I think there's still plenty of opportunity for people to participate and get good rates of return.
I think, Liz, it's an important question. As David said, it gets asked every time there's an evolution in the marketplace. I think the key here is, what's the demand side for the capital? And the demand side everywhere in the world for private capital is only going up. We launched our business in Japan 25 years ago. There's a demand for private capital. There's demand for private capital in Europe. There's demand for private capital and growth here. And so I think the competition for global capital is high. And we happen to be going through a cycle where fiscal capital is too stretched. Deficits are too high around the world. So it really can't be funded by governments to the extent to which you otherwise might want it to be in terms of infrastructure, growth, economic support. And banks can play a very vital role, but they can only play so much of a role. So the demand side of the capital is significant wherever I go in the world. And so I think this is actually going to be a natural give and take. But there will inevitably be periods where there'll be supply versus demand issues. But in the long run, I think it fits quite naturally.
The Formula One race, by the way, they're spectacular to watch if you can understand what's going on, because I finally figured it out. But if they could invent mufflers for the cars, I would like it better, because otherwise you have the earplugs. But if they could figure that out, it'd be even more enjoyable for me.
We'll put in a word. Another big trend to watch in private capital particularly is consolidation. It's increasingly becoming a scale game. Carlyle is about $500 billion of assets?
Yep.
And I'm curious, sort of, maybe Harvey and then David, where you think that line, the sort of minimum, not necessarily size, but breadth and ability to be able to compete versus, the sort of bifurcated niche players sticking to their knitting, mostly not publicly traded the way Carlyle is.
So there's this question of scale, I think, is quite critical. I think all the things we just talked about in terms of the trends of competition for global economic capital require scale. So again, we've been in Japan for 25 years. We've had an office in Abu Dhabi for a number of years. David was one of the first, if not the first, to come to the region with Baker and Bush back in the 90s. And so you need a global footprint, Liz, and you need a global strategy. You need the ability to scale that across all of the capital solutions. And I think when you think about the evolution of data science, AI, you need to be able to make that investment so you can harness all that data and that information. And having said all that, I think, I guess it was 1998 long-term capital. I was just a kid on a trading desk. And when long-term capital happened, someone quite smart was walking behind me, been in the business a long time, and he happened to say, okay, that's it. That's the end of hedge funds. There'll never be any more hedge funds in the world. For those of you old enough to remember, that actually kicked off the hedge fund boom, and it grew dramatically. And so I think there'll always be a role for niche players and specialty players in all aspects of finance. But I do think scale in terms of the ability to harness the data and make the investment and actually really deliver global solutions, I think is quite critical. Where the cutoff is, I don't know, but you really need geographic diversification and you need solutions. Because when we talk to clients today, in the same conversation, they might be actually looking to reposition their portfolio, buy an asset, create a fund. And so the client sophistication and scale is huge. And so you have to be able to match that.
I think scale is important, and we're very fortunate to have scale, and scale can help you get into deals you wouldn't otherwise get into. But the most important thing to me is to have highly incented individuals with high degree of intelligence and work ethic, and they're really to build something from scratch. And so somebody tomorrow could come along and build the next Blackstone, Carlyle, if they have a pretty good work ethic, they have a pretty good idea. So it's not impossible for somebody to come along and build a big firm of scale, even today. Though today the larger firms do have an advantage right now, but you can always find a new way to build a niche and build a big area of expertise and develop investors. So it's really still available to capitalists to be able to build their expertise and build a big firm and get the advantages that we currently have.
Well, that's all the time we have. You can spend the year practicing on the tire change, and we'll time you next year.
Thank you.
Thank you, everyone. Great to be here.
Thank you so much.